What's up, everybody? I'm Nick Campo. This is
Big Boss Ben.
Big Boss Ben, and this is the Loan Guys Podcast. We are NBI Financial Group. We are a mortgage broker shop, and we are the Loan Guys. What's up, Benny?
We are. How's it going?
Oh, I'm doing pretty well. How about yourself?
Doing good. Feels like casual Tuesday over here.
Yeah, you forgot your jacket. I'm not
did.
wearing my jacket because I was visiting realtors and doing all that fun stuff. Drove 8 hours or 6 hours, actually, round trip to tell some great realtor partners, to have lunch with them, break bread with them, build relationships with them, and tell them all about the great thing, the 12-day average we have from contract to clear to close, and to tell them all the different loan products we can do. We can do everything.
We can. Had a new clear to close today.
How many days?
This one was, well, it was new construction.
New construction, so it took a little bit
So
longer.
it was a little over 30, but that's because we had to wait on order the appraisal.
Or wait on ordering the appraisal, had to wait on builder,
But
all kinds of stuff.
right.
Yeah, those builders, man, they just need to hurry up.
I know.
They're hurting our averages.
They're killing us.
Gosh darn. What do you got for me?
They're killing us. Well, anyway, so you mentioned you went to Raleigh and saw some realtors
Yes.
face to face.
I did.
So
I've been getting belly to belly with a lot of realtors lately.
interesting. So do you think? I mean, a lot of people are out there hitting the phones hard.
Good for them.
So you're going and seeing people face to face. Do you think?
I'm doing both.
Do you think that extra touch of seeing them in person makes a difference?
People do business with people, Benny.
Okay.
People do business with people. And at the end of the day, when I call you up and you hear this great voice of mine, and you have to admit, all you watching the podcast, this is a great voice, right? Well, I have a voice for radio and a face for TV.
Debatable.
Here's what I truly believe. I believe that we are in a rising interest rate environment, and interest rates might be going a little bit higher than anyone expected. And I believe that I am going to outwork everyone because I care about what it is I do. And it is exhausting at times, but I will be back at it 7 a.m. tomorrow doing everything I need to do to make sure that I continue to produce, that I continue to help build this business, that I continue to do my part. And my part in this business is to be the number one producer.
Plain and simple.
Plain and simple. Number one. So your question was what? Does face-to-face work better than phone?
Yes. Is it worth taking the time away from
Absolutely.
prospecting to go meet with realtor face to face?
Yes, because I'm meeting with several, right?
Right.
Now, when you say prospecting, I think that is prospecting, and this is a realtor that has referred us multiple loans. I closed one pretty quickly, and then the other one, it's taken a little while because we need a survey, and survey companies, if you don't know, are kind of slow.
Yeah.
They have bigger and better plans to expand, and there was lots of talk that I had with this realtor, who's also a broker in charge of their shop, a co-broker in charge of their shop, and there was two of them that I met with that are licensed in multiple states now. They're growing extremely quickly, and they're looking for a primary lender, and we can fill that role because of everything that it is we do. And they're talking about they have a partner of theirs who's in land development that's a builder and is going to be developing a bunch of land around Raleigh that we are now going to, hopefully, if everything continues to go down the proper track, be the primary lender on. And we're talking hundreds of houses. So I don't know.
Great.
Was it worth it? I didn't know about this just talking to him over the phone. I sat down. I broke bread with them. I paid for their lunch, which they offered. And I had thought I left my wallet in the car because I was in a rush. I even went the wrong way down a one-way street.
The old forgot my wallet in the car trick.
I was like, damn, they probably think we're some broke lenders. They probably think that we're the Loan Depots of the world and we can't keep our wholesale division open. And then, long story short, the cell phone was actually in my computer bag, which I brought with me just in case they wanted to see anything. But on the way there, the first place that we were supposed to meet at, I did meet a top producing purchase loan officer while I was up there, trying to recruit him to come work with us, to develop the Raleigh market. We'll see if it works out.
Yep.
So I got to do that. stopped in a couple realtor shops up there because I'm going to take over North and South Carolina. That's just what's going to happen. We're going to dominate. And then got to talking. First place we were supposed to go, it was slam packed. So they called me as I was pulling up. I was like, okay, I'll drive over to the other place. Well, there's a lot of one-way streets, and I'm a mess with directions. And when my GPS is no longer functioning because I've passed it and I see where I have to go, I accidentally turned head-on into one-way traffic. Hey, y'all. Thanks for watching this clip. Go ahead and bang that red subscribe button.
And turn on notifications by ringing that bell so that you can keep up with all of our mortgage and real estate content.
Now back to our regularly scheduled program. Yeah. Was that part worth the trip? Well, I risked it all, and I said, screw it, there's a parking lot, and I just turned into the parking lot. Luckily, it's not too busy in downtown. It's not Charlotte. One way in Charlotte, if you turn it, you're getting hit, right?
Yeah.
So Raleigh's a little bit smaller.
Or Atlanta.
But, yeah, or Atlanta. That wasn't good. But that's the second time I literally thought of that when I turned. I was like, what is wrong with me? I'm bad with the direction. Everything turned out okay. Got into the parking lot. It was like right there. But anyways, long story short, is it worth it? Yes. We develop future plans together. I've already gotten a text message. I've already gotten an email. I'm going to follow up with an email, and I'm actually going to build a processing team around them and their development. So the more business they send, the more people we're going to be hiring and training to work specifically with them. All their business is going to run through me and you. They got what I call grandfathered in. So no matter how big we get, their direct contacts are me and you. So do I think it was worth it? I do. Do I think that getting face-to-face, which I like to call belly-to-belly with my realtor partners, is worth it? I do. I believe in building relationships. And it's funny because you'll hear a lot of people in our position who are like, man, I wish I could just get rid of the realtor relationship. I don't. I love the realtor relationship. Now, do they put pressure on me if things aren't moving fast enough? Yeah, but we're clear to close on average in 12 days. So,
right. And that makes us better.
That makes us better. We're very knowledgeable. They really like you, which I'm not sure why. They like my passion. Something that I thought hurt us with the first loan I ever did with them was, do you remember the closing attorney? I don't want to say the client's name. Closing attorney screwed up. Client was sitting there, purchased. It was a new build. It was the first time we figured out that this lender did not do a good job with taxes.
Oh, I remember.
And I got real passionate with the client.
Yes.
Not at the client, but was talking with the client, and I was upset at the attorney. And I was like, this is not your fault. I'm not mad at you. I'm mad at this attorney. Here's why. And I didn't throw him under the bus, but long story short, it was partly on the attorney. It was partly on the lender. I explained the situation to the client, but what'd I do? I took blame. I said, you know what? This is on me because we should have never we should have had this package out 2 days ago and dealt with this 2 days ago. You should have not been sitting here.
Right.
And it was when we first started the business. I took
That was
some big time ownership of that, and we have adjusted our whole process.
That was our third or fourth loan that closed?
Ever, yeah. And we adjusted our whole process. You remember that?
We did.
They told me today that when their client came to him and said, Nick really cares, he's extremely passionate, that was it. And then the one that we currently have in process where we needed the survey to title it, and I explained to him what guidelines were and how we would have never been in this situation because we would have said, hey, we either need to get this survey here or it needs to go conventional. And if it's going conventional, here's what's happening. You want to know what they said? They knew we knew what we were doing. And apparently, there's not a lot of people who do what we do up front.
No. Well, yeah.
So they're looking for a preferred lender.
And there's not a lot of brokers out there who know guidelines about multiple parcels and will dig into it and actually know even to look into that.
So when they were complimenting us, I said thank you, of course. And I said, it's not what we know. It's what we know to ask.
Exactly.
Because
that's key.
When I don't know everything, and I'm not even close. And I come to you for a million questions, and we go to AEs, and we go to lenders, and this is why we had an episode on here where we talked about, can you survive in this industry alone? And the answer was no, and we need a good team, and we need this, and we need that, and we need good AEs, and so on and so forth. And I went on and on about lenders and what I'm looking for in a lender partner, and what I'm looking for in an AE, and what I expect out of my AEs. Do you remember that?
I do.
And that was what I kind of told them. I said, listen, when I'm putting a loan together, every person's weird. I'm weird. You're weird. We have our quirks, right? So is our financials, our self-employed. We're this, we're that. We write this off. We do this. We make this much money, but we put this much here, and we do this and that and the other thing, right?
Right.
Everybody has it. Or a first-time home buyer doesn't have a ton of assets, but wants to get into real estate, whatever it is, correct? So I say, the first question I said, how can I help? And why is this weird? Who do I want to bring this to? And there's multiple options. And then I check pricing. And pricing is not always the end-all, be-all, but I do check pricing. And then I have a conversation with the lender to figure out what it is that we need to make this weird person work, because we're all weird.
Yep.
And they love that. They also love the story about that client shopping us.
Yes.
They said, was that client hard to deal with? I said, no.
Except they Googled what are interest rates nowadays.
Yeah. They Googled interest rates nowadays, called me at 9:30. I told them they had till 10:01 to decide if they wanted to lock or not, because we got a alert to lock notification. Do you remember that?
I do.
And they didn't get back to me on time, so I went to bed. You remember that?
I do.
And then the next day they were like, we want to lock. We aren't going to leave you. And I told them that we had spent hours on doing a comprehensive real estate plan. You remember this?
I do.
Hours on a comprehensive real estate plan.
We did, because we stayed up till midnight working on it.
TCAs, yes. Like, we did all of that. And we were
right here, sitting at this table.
And we were working that together. Our wives were in bed, probably missing us. And I told them that. And they're like, you just said you were going to do business with them? I said, I don't need their business enough for them to shop me over $12 a month.
Yeah.
Do I want their business? Absolutely. But I put a total cost analysis together for you, which takes time, lots of time, and nobody else is doing that for you. I went through why interest rates are doing what they were. And this was right when interest rates started rising, and everybody, that was the first question. They don't ask it as much anymore, but it was the first question out of everybody. And then the next thing is we put together a comprehensive real estate plan, which at that time we were doing all by hand. Do you remember that?
Those took forever.
Like hours and hours. We were probably 15 hours in, and we were clear to close.
Basically what it is, we manually calculated a customized amortization schedule.
Let's not get too much into our trade secrets.
No, I'm not. But I just it's pretty labor intensive.
It was, and we have better ways to do it now, but it's still labor intensive. And now instead of doing it up front, we do it once they're clear to close on their new loan.
Right.
So
something to look forward to once you're through
the process, and we know you're closing with us, because it was just so labor intensive that it was stopping us from going out and doing what I call green activities and bringing in new clients. Not that we weren't, but it was causing us to work a lot of hours, be away from our family. And we do this to help people, but we also do this to provide a living so that we can enjoy our time with our families. So I told them that story. They absolutely loved it. And it put a little bit of they got to see me in person, face to face. And I just think that we earned business today. I drove 6 hours round trip. More than that. It was 3 hours, 45 minutes up, and like 3 hours, 15 minutes back.
Jeez.
I left my house at 5 a.m. It's 8:43 p.m.
You've been back for about an hour.
Yeah. So I got back at 7:45. Crazy.
Yeah.
But we might be a preferred lender on a neighborhood that's being developed right now because it's a private builder. How can I help a private builder? Here's how I can help a private builder. I just went through every option we have. I even went through the Link program. Yeah.
Great program, by the way.
Right. So, long story short, I went through everything, and I told them we'll never have to turn a loan away.
Yeah. I mean, pretty much.
They loved it. And we hit it off, great relationship, and I think it's in the beginning of building, and we are now probably going to be getting licensed in several different states because they're getting approved in several different states. And I said, we will grow with you. We're at the same points in our business. They're a partnership, and one of them's high strung and one of them's passive. And it's very funny because they're, it was just very funny. So yes, to answer your question, meeting realtors face to face, meeting your business partners face to face, meeting anybody face to face, I think builds more trust. You get to know people. Hey, y'all. Thanks for watching this clip. Go ahead and bang that red subscribe button.
And turn on notifications by ringing that bell so that you can keep up with all of our mortgage and real estate content.
Now back to our regularly scheduled program. And people want interaction.
Like you said, people want to work with people.
100%. So, yes, to answer your question, what else you got for me, Benny? Is that all you had? You wanted to know my trade secrets and how I'm slowly becoming one of the top producers in the industry?
No, I mean, you made a trip all the way to Raleigh, and I just wanted to explain why. I thought that'd be good information.
Right. You wanted to know what I was thinking the whole time?
What?
Damn, I wish I had a shrimp taco. I'm so hungry. I was driving. I had our snacks.
You had your little bar.
I had my little bar. Yeah, we're doing this nutrition program. Ben and I are down some pounds.
We are.
And you're hungry though. I call it it's a great program. I've lost 30 pounds in about 5 weeks.
Controlled starvation, basically.
Yeah, not really. There's a weight loss phase and then there's a maintain phase, but in the transition to the maintain phase. But we were both overweight and we needed it, especially with starting this business. You know what I'm saying? So, yeah. Oh yeah. How was your day today? Sitting around the office doing nothing with our.
Oh my God. It was good, productive. Like I said, got a clear to close. Got another one coming tomorrow.
Great. That's a lot of clear to closes. We need some more loans.
Yeah, we do. So
we have a bunch of loans just sitting waiting to close that are clear to close.
Yeah, that's the plan.
That's the plan. That's our process.
So yeah, our goal, and I mean, granted, not everyone's going to close in 15 days. You're going to have people where the seller's still in the property.
Yeah.
Our goal is clear to close in 15 days. No exceptions. Other than new construction, because you got to wait on appraisal, but
that's not an exception. We got to push those builders. Here's the deal. I actually changed it from 15 days to 12 days.
Okay.
If you're clear to close in 12 days, it's hard to lose that business.
Yeah.
You know what I mean? So, yeah. We got a bunch just sitting around, probably 5, 6 loans.
Right now,
I know of 3, 4.
There's 5.
5. And there's a couple others that are like right there. We're waiting on
We'll
title.
have another one tomorrow, and then
that's 6.
Then we're gonna have another one on Friday.
7.
Just pending.
So we have
CD from the seller of their other home.
So that would be 7 loans sitting around clear to close.
Or just waiting on one last little thing.
Yeah, we're doing good.
Yeah.
That's great. That means we got to go get more business because if we can do that, that means we're turning it around quickly, right?
It does.
So, yeah, let's do it. Come on. Come on.
Yeah. So, let's jump into some market talk because
do we have to?
we were going to skip this episode because we talk about it all the time, but this last week has just been insane. We lost so many basis points yesterday.
We lost 160 in one day, 155 in one day.
Right, on the 26th. That is absolutely
of September. The 26th of September, the year was 2022. And the Fed did not know what they were doing. Right. And what ends up happening when the Fed doesn't know what they're doing is you lose 155 basis points in one day, and the day prior we lost 90, 85. Yes. So that's 240 basis points, pretty much, about 240 basis points in 48 hours, in 16 business hours. It takes a special kind of person to be able to do that.
Well, the Fed is that type of special.
Dude, but here's the deal. Let's talk a little bit of history. Do me a favor while you're on that thing and I'm talking.
Okay.
Google Fed chair during 1980s interest rate hikes. And I'm going to tell a little bit of a story about this Fed chair. I can't remember the name off the top of my head, but I think this person did a heck of a job inflation was like 22% in the 80s.
Paul Volcker.
Is it Volcker?
It's from 79 to 87.
Who was after that?
Let's see.
Who was after that? Because here's what I'm going to tell about this story. The person's name that I'm looking for, and it might be Volcker. I don't think so, though. I think it was, when did Reagan get elected? This is just me knowing the history
82.
of the Fed. So it might have been Volcker, so he kind of stopped the inflation at that point.
Yeah, because he hiked it up. But let's see. I'm pulling up the whole list of them.
Yeah, pull up the list, because here's the deal. At the end of the day, you have to have somebody who's extremely savvy.
No, so Volcker was it until Alan Greenspan.
So it's Volcker.
Who was the one until 2006.
Yeah, it was Volcker. So long story short, inflation was like 22%. It was something crazy. Look up what inflation was in the 80s.
That was 22%.
Yeah.
20, and that was Volcker.
Yeah, so it was 22%, and Volcker's like, we have to do something to stop this, because this is insane. You cannot have inflation at 22%. People could not buy houses. So he started hiking the overnight bank rate, right? But he understood something. He started looking at the CPI numbers and the numbers that they would put out, and he was looking for trends in the numbers that maybe indicated that, okay, we're going to push towards recession. And what people need to understand is what they're doing is they're pushing the rates higher to get people to stop spending money, to slow down the growth of the economy, because the more money that's spent, the higher the less supply there is. A high demand, it pushes prices higher, and that's not the only reason. But when people are spending money,
I mean, yeah, supply and demand.
Right.
You have a high.
That's the theory, right?
Demand. It's high prices.
So there's different factors within the CPI, that the consumer pricing index, that will cause inflation, right? And then the first half of the inflation rise was, we had a massive supply chain disruption. Do you know what that was?
Right. COVID.
Everything shut down. Things shut down worldwide. Countries are just now starting to open. Countries are just now allowing unrestricted travel, like years later. So you have a massive supply or chain interruption, which causes an issue with supplies for different things, which causes a rise in prices, right? So that was the first half. And then do you remember what happened in the second half of this whole inflation debacle? I'll give you a hint. Ukraine. And so what's everybody start doing? Cutting off Russia.
That's a pretty good hint right there.
Yeah. Do you know what the hint was? What was that? It was a machine gun because of war?
Yes.
Oh, okay. So you got that? But
I think your next door neighbors got that.
Yeah. So anyways, there was and I'm just giving a little bit of a history lesson here. There was a massive disruption, and guess what? Fuel and energy. So guess what started to skyrocket? And they called it the Putin price hikes. It wasn't the Putin price hikes. It was the fact that everybody boycotted Russia, and Russia had supplied a massive amount of petroleum to the world, like a huge share of the petroleum, and it caused prices to go up for everybody, and fuel prices rise, right?
Right.
So we get the supply chain issue starting to handle itself. And if you look at the CPI numbers and tell me I'm wrong on this. So the supply chain issues, they start to handle themselves, and they're going away, and prices are starting to come back to normal on these numbers. But on these other numbers in the CPI, such as fuel and energy and gas price, they start to go up, which is creating more inflation. So you have to separate the numbers out, right? So Volcker, what he recognized is the other thing we need to look at is like jobless claims, and we have to actually dig into the numbers. We can't just throw the numbers out like Fox News does and MSNBC and CNN and just throw a number out. You have to actually look at what the numbers mean.
Why.
And know why. Or know what types of jobs are being created. How many why are people claiming unemployment? How many people are entering the workforce and how many people are leaving the workforce? Hey, did the unemployment numbers go down because these people are just no longer in the workforce? That can happen, right? There's a bunch of different things you can look at, right? So you need to look at that, and they need to understand when there's certain numbers and stuff within the CPI, and these people are a lot smarter than me, and they should know this, that the interest rate hikes that they're doing, they need to watch these numbers, and when these numbers start taking changes in effect, maybe taper the hiking of interest rates, right? Maybe show that you have this inflation thing under control. They have not showed anybody that, right? But what Volcker did is he watched these numbers very closely, and there was key indicators within these numbers, and he stopped hiking interest rates for when he saw that certain numbers that were indicators to him and should be maybe, is it Jerome Powell? Maybe Jerome Powell should look at what Volcker did and learn from history, right? And say, okay, enough with the hikes. We probably reached peak inflation. What Volcker did, he did it perfectly to stop the inflation and then brought the interest rates back down to where people could afford houses again. They weren't having to be 15% interest rates because they got up to 11, 12, 14, 15, depending on credit scores back in the 80s. It was hard to buy a house then. What's happening now is we have not allowed any of the hikes to truly take effect, and to see it takes 6 to 8 months to see how a market's going to react. Just because you hike the overnight bank rate and the interest rates are going to go up, you don't know how people are going to react. I have a feeling that they don't even understand that we've reached peak inflation. October might be the last number that is like not peak, that is kind of peakish, but it's going to drop significantly. By this time next year, it's going to be 4%.
Yeah.
Mark my words, by this time next year, inflation number will be 4%. Dude, I think that they might end up driving us into a massive recession. They're going to hike it another 125 basis points. Interest rates are high. Those primary residents look like investment property numbers.
They really do.
Worse. You used to be able to get an investment property with 5.5% interest rate. It's 9% now.
Price went out today at 9.5.
Jeez. But I have a fear that they're not going to stop hiking and they're not going to understand the CPI numbers and they're not looking at key indicators, and I have a fear that they might end up driving us into a deep recession. I think they want to do it on purpose.
That's what I was about to ask. Do you think it's intentional? Because, and you have to wonder, because if you raise it up another 125 basis points, why that extreme now? You think if you were going to do this, have it at the beginning.
There's not going to be a soft landing is what they said.
Well, yeah, not when you do something like this.
Why would they want to do it on purpose? That's the part I don't understand.
I don't know if it's political. I don't know.
So you think they're all Republicans and they want to tank Joe Biden?
I mean, Trump did promote Powell.
There's no way.
No,
I mean,
look, I'm not saying that, but
Ben's joking. We're not getting political, but I mean,
absolutely, that was a joke. But I mean, I will say that there must be some reason that I think they're doing this. I think they know that. I think they want to shock the market for some reason.
They know more than we do.
They do. And my only question is, if they're going to shock the market, why not do it from day one?
They waited.
Right. They did it gradually.
But they look incompetent. Does it not look incompetent?
Right. But they did it in a way that made everyone look like they had it under control, that they were going to raise it to a point when inflation was at their peak, which everyone was saying is either October, maybe November.
Everyone wasn't saying that they were having it under control. I think I know of one guy who's like, they need to rip the Band-Aid off.
You were saying that.
Because this doesn't make sense.
But there were a lot of people saying that it was under control. And now, and what happened the last 2 days and why it increased so drastically is because everyone's saying, oh, they don't have it under control.
They haven't ever had it under control.
Right. But I mean, I think people are just now realizing that.
Well, they should have listened to this podcast, because I've been saying for a long time that they do not have it under control. And it was painfully obvious from day one they didn't have it under control, because you don't do a 50 basis point hike with the inflation. It was high.
Right.
It reached over 9%. I think it was like 9.2% at one point. Like, that's when you do like 100 basis point hike. Whip that damn Band-Aid off.
And now they're doing the 125 basis points.
Well, no, they're going to do that over the next 2.
Still.
So that means
That's another 75 and then another 50. Like, that's crazy.
Do you think they go through with it? I will say inflation's bad, and they have to get the inflation under control and the prices under control, because here's the issue, man, is you look at the amount of savings shrinkage. So there's numbers that track how much money Americans have in their savings accounts, and it's shrunk by almost $1 trillion since January.
56% of Americans have less than $1,000 in their bank account.
Yeah, well, I bet that number's higher now.
That's wild. Yeah.
I bet it's higher now because it's just, well, it's also because, we don't take personal finance in this country. We need to have personal finance classes starting at first grade.
Yep, you are 100% right.
Kids should learn, but man, why would they do it on purpose? I'm not trying to be a conspiracy theorist, but it feels like it. I mean, they have to know. They have more information than we do. They have more information than CPI. They have and CPI stands for Consumer Price Index. There's other numbers to look at as well. But why in the world would they want to drive us into a deep recession? 2008 was a deep recession. That shit hurt.
Yeah, it did. I mean, we graduated from 2012, and
it was still
a tough job market.
We got into the mortgage industry. Mortgage is always hiring, except for right now.
Too soon.
What? How's that too soon? What? Is that bad? Like, it's not. No one in the mortgage industry is hiring right now, except for us.
True. That is true.
We're hiring loan officers, producers, big time producers. Why would they do it on purpose? I'm asking you.
I mean, I don't know. I don't know if it's, like I said. I mean, we said maybe it is something political. I think that's more on the conspiracy theory side. But you also got to consider too, they have a government that's still mass printing money to send to Ukraine. Do you think it's them trying to make a statement of, hey, we can't do this when the government acting like it is? And
but aren't they the ones responsible for printing the money?
I mean, but who's really responsible for it?
Say no. When they come to you to print more money, say no.
I mean, I don't know how that works if they actually can. Like, if the president comes to you and says, we need more money.
But the president can't do that. Congress has to do it.
If Congress goes to you.
They got to stop printing money.
They do. They do. Regardless of the reason, stop printing money.
But the problem is they're not hurting the government. They're not hurting where the money's going. They're hurting the everyday person with what's happening.
Absolutely.
This doesn't hurt the government.
No.
This doesn't hurt the bureaucrats. This hurts the people in factories. This hurts the people in this industry. This is the part that drives me crazy. Like, we have friends of ours in this industry who are great at what they do, who are unemployed right now. Because why? Because we have an irresponsible government that wants to print too much money and drive inflation even higher. Because why? Because we shut down world economies. Like, this was all self-inflicted.
Right.
This is a self-inflicted problem. Now, granted, hindsight's 20/20. But it's a self-inflicted problem. I mean, and it sucks. Like, I know good people, as you do, who have lost
a lot of them.
Jobs. There's companies that just went out. There's a company that we know of that just shut their whole wholesale department down and didn't tell anybody.
Well, they didn't. They were hiring people on Thursday and then just closed on Friday.
Right.
Literally.
Wild. And those people will bounce back.
No, they will. I mean,
but times ain't easy.
No. And we just brought up how many people have less than $1,000 in their bank account. If they lose their job, what are they going to do?
Foreclose.
Right.
Or how about this? What people don't talk about, how high are credit card interest rates about to go?
Yeah, when they adjust. Oof.
And when do they adjust? The beginning of the year usually?
Depends on the company. Some after a year. But yeah, like whenever they're.
Yeah, so I mean, it is tough out there. I don't know why the Fed's doing what they're doing. I don't know why they're hiking the interest rates this late. I don't know why. Maybe they think that people are spending too much money, too much retail money being spent. Maybe they're looking at those numbers. Maybe people are spending their savings accounts still instead of leaving their savings accounts. Maybe people are spending on credit too much and they just want to slow the spending down. Maybe, do you think that could be it? I think you might be onto something when they're trying to make a statement about what our government's doing with the printing of money and sending it all over the place.
Yeah, I mean, I find it I have a hard time believing that, because as times get tougher, because we are in a recession, heading to one.
No, are we? Because they won't admit it yet. They said it's not going to start till January. I think we're in it now.
I think we're in it now too, and it's only going to get worse for at least the first quarter, probably 2 of next year. Even if you stopped raising the basis points, people are going to stop spending those credit cards because of the way that the economy's going. I mean, because they're going to see that, regardless of what industry. Even if you keep your job,
I've stopped spending.
You're gonna yes, you are going to hurt in some capacity, or you're going to see people close to you hurting in some capacity and start saving because that's what you think you need to do.
Well, I've already stopped.
Me too.
Yeah, I don't go to the clubhouse anymore and order $1,000 of wine. I don't. Like, I completely shut down spending.
For good reason.
Yeah, no, seriously. Like, my wife and I talked about it. We have our budget, and we're doing that again, and it's shut down, and we're still making good money.
Yeah.
But at the end of the day, I don't panic. I think that if you continue to work hard, not everybody has this luxury. We own our own business. So if we continue to work hard, we can make do, right?
We can.
It's going to be tough. Next few years aren't going to be fun. But I was telling them today at the meeting up with my our partners is like, this is a perfect time for us to be expanding.
It is. It is. I had an aide tell me the exact same thing today.
What did he say?
He just said, look, I know rates are not great right now. Said, but you got in business at the absolute best time. Just keep your head down, keep pushing, keep grinding, get through this tough time, and you're going to come out on the other side of it way better off.
Yeah, I think this is the first time I've ever started a business at the right time.
Yeah. Yeah. And it's not going to be easy, but it's the right time.
Nothing good in life is easy, Ben.
True.
So, yeah, but I'm excited about this time because we are going to be growing. I'm going to be grinding, and we're going to be belly to belly with people, and we're going to do well. And, you know, one of the things about owning your own business is you just keep working hard, man. Just keep plugging away. Go get business. So, and, you know, typically a recession is good for housing.
Yeah.
And mortgage.
It is, especially when there's
How short-sighted do you have to be to
shortage.
close your company down?
I'm amazed. I am still amazed at that one.
I mean, there's a few.
Right.
How short-sighted?
AmeriSave, Loan Depot, Sprout.
PRMG?
Yep. What's the other one?
Home Point? Oh, not yet. I'm kidding, Home Point. My brother works there, so I'm just giving you all a hard time. I don't know. There's been a lot. You think Fairway's out of business yet? I'm kidding again, Fairway. Even though I did tell y'all when you called I won't do business with you. You want to know why I won't do business with him? It has nothing. Well, part of it is the UWM thing, but he told me that I sounded like somebody from AIM. You want to know why? I said, dude, like I literally compete. Like one of your top producing loan officers, Ted, is in my market, and I literally compete against him all the time. No, I'm not going to send you business. He's like, you sound like you're a member of AIM. I said, I'm not. I'm not. And don't get me down that path because you know, Ben, I'll go way down that path. And anyone who follows us on social media knows I've already kind of gone down that path when it comes to that whole thing.
Yeah.
I won't do business with somebody I have to compete with. Why am I going to put money in your pocket when your guys are competing with me?
Right. No, you're 100%.
But again, we can get into that's another podcast. You guys should go watch it.
Yeah,
and I had a lot of
got
great
into that one.
Yeah, and I have a lot of great feedback on that. But yeah, and maybe Fairway's good. You want to know what he said? He said, "Well, our wholesale channel's beating our retail by a full percentage point." Well, then you should tell retail to lower their pricing because they are ripping the consumer off. He didn't like that. He started arguing with me. I'm like, dude, like, you're trying to call me for my business and you're going to argue with me? Like, that's fine. Like, you should find a different company. Do you want to come work for me? You can work on this side of the industry. I pay you more basis points than they pay you. It was funny. It was a cool conversation. He sent me an email afterwards. He's a veteran, so thank you for your service.
So that's about it.
No, I thank him for his service. I thank him for calling me. Listen, I will never rip somebody for calling me to try to get my business because I do it on a day-to-day basis. It's not easy to do.
Yeah.
I won't hang up. I'll have a conversation. He caught me right in the middle of having to unload the car, feed the dogs, like do all kinds of stuff. It was like I took a 5-minute break from work, super stressed out. I think it was a day we were losing multiple loans because of different reasons. Not like anything we did, but sometimes inspections and borrowers sign out proceed, that type of thing. And eventually it'll be another loan, but it takes so long to get them under contract for the home. Like, it's a long sales cycle a lot of times in this market anyways, which it's still. I met with another realtor and I was explaining to them it's still an unhealthy market. 14, 15 days on average in our market. A healthy market is 35 days. So I guess it's still a seller's market. But I don't know. What do I know? But anyways, yeah, so he caught me in the middle of everything. So I was already in a bad mood. And I can be moody sometimes. And he was begging me for business. And then he said where he was from. And I said, Fairway, aren't you guys a retail shop? And he said something else. And I said, I can't work with you. And he said, why? I said, because UWM does not let me. And to be completely honest, I don't feel like being sued again. That's another episode that you guys should go watch it. And bang that red subscribe button while you're at it. But
you sure you don't want to start collecting cease and desists?
Oh, man. And he was like, fair enough. I was like, well, I hope so. I'm waiting to see how these things out in California, these lawsuits that are carrying out with some of the big boys out in California, big broker shops, how they carry out, because there are a few going on, and UWM's going after them because they signed a contract and just didn't abide by the contract, and rightfully so. UWM should go after them if they signed a contract, but I really want to see what the court system says. Are you allowed to do this? Because if not, then then I think we need to shop around. But until then,
100%.
We signed something, and we aren't a big shop, so we're not going to shop around. Not by choice, because I would love to go to
being able to shop around is part of being a broker. So
and we can still shop around. We have 20 partners.
Oh, absolutely.
And if they ever did this again with any other lenders, I would end my relationship with them in a heartbeat. And I think that they know a lot of people would.
Right. They would. It's a line they don't want to cross, and they set,
Well, don't challenge Matt Ishbia. He might cross that line. He's got, he might cross that line. I could see him, like he's not the guy you want to challenge.
So, here's an interesting number. Last month in August.
Yes, tell me.
New build sales increased by 28.8%.
Because there's not enough inventory.
Right. And I'm also hearing a lot from a lot of realtors about how new builds are opening up because they have had a lot of issues.
What do you mean?
Meaning, so before they would only offer realtors 1% comp.
Right.
And now they're upping it to 5% comps.
5%?
Yes.
So they get both sides of it?
Yes. Meaning I think new builds have been stuck holding on to it, developers, and I think they are in a point where they want to sell. Now, granted, I mean, that's not everyone. It's regionally based.
Are you talking about here in the Carolinas?
But I just think it's interesting. That's nationwide. That's what I mean.
Nationwide. Okay.
So it's regionally based.
regionally based.
But I think a lot of new builders have lowered prices and have opened
Not
up
here,
to
though.
realtors. Not here. I mean, I have been hearing for some realtors in the Carolinas that they're reaching out to them, offering them more percent comp.
I also think that they ran into an issue where interest rates went up and they were priced too high, and it priced a lot of their market out.
That's true.
So when interest rates go up like this, I mean, payments can increase by $300-$400.
We've had
more
clients ended up coming to us because the lender they worked for had them qualified, and interest rates got them to a point where they didn't qualify.
Right, and just so happened to be the builder's lender.
Right. We had to step in and make it work.
And we did.
We did.
Because we're better priced.
We did.
Better priced and better service. Weird.
Yeah.
Why wouldn't you work with
We got
us?
them a better rate with lower closing costs.
Crazy.
Imagine that.
Weird. Never seen that happen before.
So I don't know if this new build thing is going to be a trend, though, or not.
What size builders? It won't be a trend if they it'll be a trend with private builders who build 75 to 100 homes, who don't have a lending company that they own. But those big ones that build those massive neighborhoods,
Yeah.
it will not be a trend for them because they're going to push everything to their lenders. Well, actually, they're going to realtors, so maybe it will be a trend. I don't know, Ben. How am I supposed to know? I can't predict the future.
I don't know. I think it's just an interesting
Where'd you read that?
point. Mortgage News Daily.
Mortgage News Daily? Nice. Every time I click on it, they ask me for money.
Well, you're clicking the wrong buttons. Oh, God.
You also have to be careful what you're reading.
Yeah.
Because some of it's very skewed. Like that's why I only get certain sources that I get stuff from. I mean, I look at all of it, but some of the stuff I read, I'm like, oh, that's not right.
Well, it's taken out of context.
That's what I mean.
Yeah.
And plus, the people writing those, do they actually even work in the mortgage industry? Or are they journalists? Are they big J journalists or little J journalists? That's the question I have.
I mean, I think they're smaller, which I think is usually probably more reliable.
Sometimes.
So,
Maybe.
Yeah. But that kind of leads us to our next topic too. So the current media coverage and of the markets and the housing market in particular.
This is why, yeah. What about it?
I just think it's interesting. So because you hear so much doom and gloom going on, it's not that bad. Yes, interest rates are high. It affects affordability. You're paying a lot more for your payment right now. But guess what, people? It's coming back down in a couple years. This is not going to last forever. It's a short-term solution, and people still need homes, and people are still going to buy homes.
So the media coverage made me ask, are they doing it on purpose?
Yeah.
That's what made me start questioning the fact, because it's just too. But then you think about it, and it's like the whole fear sells. If it bleeds, it leads. I'll tell you this. If you're not buying a house because of the interest rate right now, you're not very smart.
Right.
No offense to all you stupid people.
Right.
Now, here's the deal. I got to put some context to this. I'm not calling all of y'all not buying houses right now stupid. What I'm saying is if you are looking for your home and you find your forever home and you fall in love with it and you want to be there and you don't purchase that home because of an interest rate, a short-term interest rate where the average American stays in for 4 years or less in their mortgage. Did you know that? The average American only stays in a mortgage for 4 years.
I did.
How'd you know that?
Huh?
How did you know that?
Because I've just
you just seen it, read it. Okay, whatever.
right.
I thought I maybe told you, but long story short,
so. I don't know.
If
just always heard that.
if you don't buy your house because of that, because of some short-term payment, let me tell you something. We have a inventory shortage. Appreciation's going up. At the same time, you'd be paying down principal. I can do a rent versus buy
100%.
comparison for you to show you how dumb that decision will be over the next 5 years.
Okay.
And
Yep.
that appreciation is compounding. So you're losing out on appreciation along your way. And here's the other piece to it. I have a saying, and the saying is date the rate, marry the home.
That's a good saying.
I made it up.
That's a really good saying. But the other piece too to that, like you mentioned, home appreciation. But guess what? Also appreciating as that time goes on, rent prices.
Guess what else?
What?
Guess what else is happening right now? The reason the rates are so high.
What?
Inflation! So guess what that means? For every $100 that you have in the bank and not invested in real estate, you lose a buying power of 8.3% as it stands today. So next year at this time, that means your $100 will be able to buy $92 worth of goods. Now put that into a big transaction like a $400,000 mortgage. How much more buying power do you have because your $20,000 down payment? And that's just an example, folks. I don't know if that's the real number because I'm not a math guy. But Ben is, and he could probably do that on his calculator, but we won't do that. We don't want to bore you. But what I am saying is if you put your down payment into that, plus the appreciation, plus the money you're paying down on principal, that's a way better return on your investment than what? Rent. Because guess what happens with rent? It rises on average 5 to 6% per year.
Exactly.
And guess what? Then you multiply that by inflation, so you're keeping that money that you're quote-unquote saving in your bank account, and then you look at the opportunity cost that you lose out on because you're not gaining that appreciation, and you might as well just take a bucket full of $100 bills, throw some gasoline on it, and throw a match. But that would probably help with inflation because you're taking some money out of the supply. So how should we handle this situation?
But meanwhile, while the rent payments are going up, you are on a fixed payment that will only go down when you refinance.
Right.
Seems like an easy decision to me.
It's a very easy decision.
Now, I mean, it is mentioned, it does have to be said that it does affect affordability. And the house that you might have been able to buy before, you can't now.
Right.
So,
welcome to America, folks, where you have to earn your big old house. But we got lucky enough to buy our big old houses before the interest rates went up.
We lucked out. But there's also alternatives there, and that's why working with someone who knows what they're doing is so important. I mean, we were able to help someone the other day by, guess what? We were able to get them on lower interest rates by, instead of doing one jumbo loan, by moving them to another lender.
And doing a HELOC.
And then doing a HELOC on top of that.
Yeah, so we got them close to 5%.
Right.
On a big-ass loan amount.
Right. So guess what? We are saving them money because there are
That's a short-term Band-Aid, though.
It is, but we're talking about people who can refinance in a couple years or can do whatever.
Right.
Like
we saved them $2,000 a month in payment.
Exactly. You still have options out there. You still have flexibility. You still have, you can get on.
Talk to a mortgage professional is what he's saying.
You can. There's interest-only programs out there. What does that do? That even with a higher interest rate, that keeps your payment lower for the next 1, 2, or 3 years. And then you can refinance out of it.
Right.
So you still have options.
There are a ton of options, and you can get creative. And if you work with somebody who's good, they can get your interest rate down. Like we got someone down 2% today.
Yeah, we did.
I mean, we went from a 7-something to a 5-something, 7.375 to a 5.375. I think it was somewhere in there. But anyways, and that was on the primary residence purchase, and we were able to do that through several different means. There's just different ways that you can do it, but you have to also make sure that the money that if you're going to do an interest rate buy down, which I don't know if I would do that because I think that interest rates are going to drop. I think they're going to start dropping the first quarter of next year, but what do I know? I also didn't think that they would be
where they are now.
Well, no, I did. I said 8.5%.
And about to be raised another.
They're not at 8.5% right now. They're at 7.
Yeah,
7.25%. So guess what? Another 1.25% is 8.5%. So that would make me what? Spot on. Did I not say that on an episode? Go back and watch that episode. Bang the red subscribe button. Turn on the notifications so you can get all the updates on. I said, did I not say 8.5%?
In other news,
and you did not believe me. Like, what do you feel about that? That I'm going to probably be right. You want to know how I knew?
How?
I just took their word for it. They literally told us what they were planning on doing, and they're doing it. That's how I knew this whole time that this was going to happen, and they were going to still be raising interest rates at peak inflation. But you know what they might do? They might drive that inflation number so far down it's at like 1%.
So that brings up the question, do you think they're going to start quantitative easing back at end of 2023?
No, I think it's going to be mid
2024.
No, mid
2023.
Yeah. think it's going
Really?
to be like June, July, August. You'll see interest rates start to come down.
Really?
Mm-hmm. I think they're ripping. I think they're slowly ripping the Band-Aid off when they should just rip the Band-Aid off real fast, and then they could have started quantitative easing in December.
Yeah.
I don't know. We'll see. Maybe it is political. Maybe they'll talk about how, Biden beat inflation, and it's 2024, and he wants to run for re-election, and look at how low inflation is now, and look at the interest rates are back down, and the economy is starting to boom. Maybe they're artificially creating pain because they really don't like Trump. That could be it. Like, that really could be it. Trump's like a swear word on. Please don't ban us, YouTube. You know what I mean? Like, that, to them, like, Trump's a bad word, and I doubt they're doing it on purpose. That's the conspiracy theorist in me. But I could see that, couldn't you? Like, hey, let's get this fixed. The Democrats want that, though.
See, if
right?
anything, I think it's going to make it last longer, though.
Why?
Because, I mean, I was expecting this to be the last of the hikes. The fact that they're going to have another 2 more, like, it's going to
fine.
drag things out.
It's not going to hurt anything. How's it going to drag things out?
Because they're going to be hiking rates until what, November, December?
No, it's going to be done. I think November's the last
December?
hike.
So another, what?
Why don't they just
12 weeks?
Why not just do the full 1.25 next month?
I mean, why not just do like 2 points at the very beginning?
Because that's still what they've been, what they've done.
No, and then you can raise another point or something. But like, what? I don't know.
Maybe they didn't want to shock the market.
Well, they shocked it now. It is considered a shock with how many basis points we lost in a 48-hour span.
I wasn't shocked.
That is shocking the market. Now, granted, today it came back a little bit.
How much? 67?
Something like that, and it probably will come back because that was a pretty extreme.
Let's see here. I deleted it. But I think it was like 65 or 67. I think it's going to come back a little bit more. I am sure I have a client who wanted me to lock as soon as all this started happening. I'm like, you do not want to lock right now. I know a lot of people who did lock.
Yeah.
They're like, oh, I talked to somebody today. Oh, I locked. I was like, why?
I mean, rates start getting worse. People think it's going to keep getting worse, but that's not always the case.
Well, I mean,
nothing
goes in a straight line this way or this way.
Yeah. Granny, you said that on Thursday, and you're looking pretty good. So
what?
If you locked on Thursday.
We did lock on Thursday, didn't we?
We locked midday Friday, like right when all this stuff started happening.
Right before it happened.
Right.
Yeah. Mostly everything was locked.
Right.
Yeah. I think that was good, though.
Yeah.
If I lock Thursday and it goes the other direction, see, I wait till the last second when I see the market. But I also understand if something isn't closing until like later in October, I'm going to kind of ride this out just a little bit. And we're back 65 basis points. And the client that was asking me yesterday, hey, can we lock? Can we lock? Can we lock? And the realtor, we should lock. We should lock. We should lock. They aren't looking at what I'm looking at. They're looking at the news.
Yeah.
It's my job to educate them on why they shouldn't lock. Right? And it's not a gamble. I don't think it's a gamble. Do you?
I mean, it depends on how you want to look at it. I mean, if you're actually making an educated decision, I mean, I wouldn't say that's gambling.
It's not gambling because
no one really knows. So, I mean, even if you make it for the right reason, something could drastically change. So you are kind of rolling the dice, but
it's better than locking in. I mean, I saved them 65 basis points today on a $375,000 purchase. So how much money is that?
I mean, that's a pretty good bit.
That's a good bit of money.
Yeah.
Do it. Multiply it. Tell me what it is. So
what were the numbers?
375 times 0.0065. What is that?
2.4375.
2,400. How much? 2,400. 437.5.
Yeah.
So I saved them almost $2,500 just today.
Yep.
when I get second guessed on decisions like that, and it's not my decision, it's the clients at the end of the day, and I give them their options and tell them what I think, and then they make a decision. And this person just so happened to listen to me, but the realtor started texting me, telling me I was wrong. And I wanted to text back and be like, fucking told you so. But I didn't. The realtor and I have never worked together before. They'll see. They'll see by the end of it. But this is what I do every day, right? And this is what I look at every day, and I try to stay extremely up to date on the markets. And have I ever been wrong? I have. I've been right more than I've been wrong. I've been right a vast majority more than I've been wrong. And it's not even me that's right. It's the people I follow and the experts I listen to that give out good information. Getting good information from people is invaluable. So, Ben, this was a pretty good episode.
Yes, it was.
I think that's a wrap. That's all I got.
Same here.
All right. Well, hey, folks, listen. Thank you for watching this episode of The Loan Guys. We are NBI Financial Group. I'm Nick. This is
Ben.
I thought it was Big Boss Ben.
Ben the Boss Singleton.
That's the Big Boss Ben.
That's right.
You can find us on all the social media. Go follow us on Facebook, Instagram, Twitter, TikTok, all the big ones. LinkedIn. Follow us personally. Follow the business page. The business page, we put out all kinds of content. Ben, where can they find you on social media?
On Facebook and LinkedIn at Ben Singleton, and on Instagram at Ben_NBI Financial Group.
I'm on Instagram. My personal is Nick_NBI Financial Group LLC, because there's an LLC after it, Big Boss. I am Nick. I'm Nicholas Campo on Facebook, Nicholas Campo on LinkedIn, and then you can also find our NBI Financial Group on LinkedIn, Facebook, and all the others. Go ahead, follow us, see our content, and listen, thank you all for coming. Thank you all for watching. Bang that red subscribe button, turn on notifications so you can see our content when it drops every single week. That's all I got. I'm out. Peace.